All right, getting one-to-one risk to rewards is very simple, very easy. But I know eventually, you guys are gonna want to get 1-to-2s, 1-to-3s, 1-to-4s, and it's targets that we can aim for to get greater risk rewards. Okay, so on this course, I do preach 1-to-1 risk reward and leave a runner. But where should the runner be led to? Okay, so in this example right here, we have aggressive buying, right? We have a bunch of yellow candles. Where did the move start? It started over here. Now, some of y'all are having like questions like, how big should my box be? It's a general area. I have to say general area because the market is not perfect. Like the demand area can be as little as this. It can be big as that. But just know that if you want to have a safer stop loss, you're going to want to have your stop loss underneath that zone or underneath a low. Okay. But it's not so much as a precision to have the box like, oh, only do it by the body of the candle or do it by just the wicks, you know what I'm saying, something like that. No, like when we draw up our support resistance, yes, we use the wicks, but when it comes to supply and demand, it have to be a general area because orders came from over here. Okay, so as it dips back into that area, you're gonna want to have, you know, once it start breaking above candles, get in for a buy, have your stop loss underneath the zone to have, you know what I'm saying, to give your trade some breathing room. Now targets. Now it's two targets that we could aim for. We can aim for areas to fill or we can aim for liquidity. Okay, so liquidity is where people's stop losses are at or at above highs or below lows. Okay, so in this scenario we have liquidity right here above that. Because think about it, this is 8 a.m. Eastern Standard Time, right? This is where we trade Forex at 8 a.m. to like 11, you know, or a little bit later depending on your work schedule. But okay, so if liquidity is sitting right here, then that should be a runner or a target, like after we get our 1-to-1. So after we get our regular 1-to-1, which was like right here, our next target should be right here. Now, how can we get even a greater risk reward? We have to keep looking left. That's the only way. You have to look left. So what do we have? We have areas to fill right here. Right here. Areas to fill. Basically from right here to right here. That area have to get filled. And then we have liquidity right here and liquidity up here. So it's not guaranteed that it's going to reach those areas in that day. Let's let that be known right now. It will not reach those areas in that day. But these are targets that you can leave your runner to. Okay, so it's plenty of options. I'm gonna show you some more examples, but it's plenty of options that you can leave the runner. Okay, we want to close in that 1-to-1. Now, when it comes to managing a trade, that's kind of up to you in a way. You can close half and then leave the runner and don't move your stop loss to break even. Or if you just want to just secure that and then move your stop loss to break even, just be aware that if it come back and stop you out at break even, you cannot be mad. Okay, so in this scenario, it did stop you out at break even. I can see it from right here. So we have a 1-to-1, and then as soon as you would have slid your stop loss up right here, it would have came down and tagged you and then went in your favor. So you gotta have faith in this. Like, I know it's hard, you know what I'm saying? I know it's hard, but you really have to have faith in this. Okay, so this is an area to fill because it never had a pullback over here. We have liquidity up here and we have liquidity right here. Okay, so the choice is yours. You know what I'm saying? Let's keep going. Let's keep going. So what do we have right here? We have a regular break and retest. This wick is a swing low. It comes back into it. We sell right here. We will sell right there at that black candle. Let me zoom in. This candle right here, we will sell. So once it break below that candle, we sell. Stop loss is above the area or above your zone. And then regular 1-to-1 as always. And then we look left. Now what is left? We have liquidity down here. We have liquidity down here. We have areas to fill. See, Forex is going to be easier when it comes to areas to fill because it don't constantly just shoot up like indices. So we have all of this to fill. Okay, all of that to fill. So target should be at least to line up with this area that needs to get filled, and that's a 1 to 3. Or if you really want to push it, try to aim for that low, or at least close to that low, because the market has to mirror itself. So that's a 1 to 5 right there. But yeah, always look for liquidity or areas to fill. Let's just keep going. I want y'all to really get this. Okay, let's see what we have. We have a swing low right here. Remember, we mark up our levels by the wicks. Okay, so it dips into it. It dips into it, and then we start selling. All right, so we sell as it break below this yellow candle right there. It broke below our stop loss. If you want to risk your stop loss, have it above the candle that broke, or have it above the zone. It's really up to you. But now look at the market. Where is liquidity? Where is areas to fill? So we have liquidity down here because people bought. So there's money right here. Okay. Then what else do we have? We have more liquidity down here. So in this scenario right here, I don't see a lot of areas to fill. Yes, these little candles really didn't have a lot of pullback, but for the most part, you could have aimed for this low right here. And then this setup also gave you a supply right here. If you can see it, it gave you supply. Aggressive selling, came back to that zone, broke below this candle, could have sold again. So you could have stacked that order. But so yeah, this is a target right here for a runner, and this is a target right here for a runner. But you must get your 1 to 1 first. Okay, let's just keep going. Let's keep going. All right, what do we have right here? We have a regular break and retest. So it broke and then came back to those wicks, which is a swing low, and then we would have sold. Now in this scenario, I don't think we have anything to look left for. I mean, look left, like there is no price action left. So I mean, I'm pretty sure it is, but I can't see it right here, and I'm not trying to lose my spot. But if you don't see nothing left, get your regular 1 to 1 and use the 13 EMA as an exit. So once we get like a strong bullish candle that closes past it, then just get out. So in this scenario right here, we get a regular 1 to 1, and then right here, that's the candle that closed above it. So we would just get out right there just to be safe. And then that's what it's about, a 1 to 3. Okay, that's pretty good. Okay, so right here, right at the NY open for Forex, we have it coming back to resistance right here, these wicks, and then it started breaking below. So as it started breaking below, we're gonna sell. Let's put this right here. Gonna sell. Now this one, it all depends on how big the candle is when it starts breaking. If it's a small candle, you're gonna have a great risk reward because this candle is so small that your stop loss will be small. Okay, so since this candle is small, you're gonna have a better RR. So right here, we can easily get our 1 to 1, 10 to 11 pips 1 to 1, and then our next on target should be this low right here, because this is a double bottom. This is an equal low. So target should be right here. That's the 1 to 3. And let's keep looking left. What do we have left? Nothing. So I will be confident we're just leaving a run right here, and then that'll be it. Okay. Now on the flip side, we have an area that didn't want to break below. It wicked, came up, wicked down again, still didn't want to break below. You should be buying somewhere up in here. Okay. So let's just say you got in late. Let's just say you got in late, because all scenarios ain't gonna be beautiful. So say you got in late. So you got your regular 1 to 1. Now, where is your targets? Okay, where's your target as far as runners? So runners can be right here, because this is an equal high. Remember, equal highs and like M's and W's, that is liquidity. Okay, we do trade double tops and double bottoms, but just know that you should be scalping that or intradaying that. Don't hold it for too long, because that's where liquidity is sitting at. Okay. So we have liquidity right here. We have liquidity up here. Liquidity up here. Okay. So all these traders sold right here. I have a whole video on YouTube for free about liquidity. So if you're a little bit confused about what is liquidity, just go on my YouTube channel and watch that liquidity video. It's going to just make so much sense. Okay. So we have an equal high. That's liquidity right there. So we could have our target right here. Or if we're really feeling like we want to hold it, then have your liquidity right here. I mean, your target right here. And that's a 1 to 3. And honestly, you can get even better than that though, but it's perfectly fine. But you gotta have some patience. Like if you really want to have bigger targets, you gotta have patience. This stuff is gonna take time. Do not be on the charts all day. Walk away from the charts. Okay. And also in this scenario, we have areas to fill. Don't forget. So these type of candles didn't have a major pullback. These candles didn't have a major pullback. This didn't have a major pullback. So it has to mirror itself. It have to. That's what the market has to balance itself out. Okay. It have to. Now, what do we have right here? We have an area that don't want to close past. We draw our support and resistance by the wicks. Okay. So it didn't want to break below. You know what I'm saying? Got rejections. We are going to buy. We have to buy somewhere up in here. This is where we trade New York at. So somewhere up in here, buy. Stop loss is underneath the zone. Now, what do we have? What do we have right here? 101 is right here, and that's a little bit above liquidity. So we have liquidity right here. These two highs, that's liquidity. Now let's look left. Let's look left. What can we do to get a better risk reward? Now we do have the 13 EMA right here to bless us, but that's just, you know, that's just one little confluence. But what can we do? Do we have equal highs over here? Okay, what do we have? Okay, yes, we do. We have equal highs right here. So let's make a line going right here, a yellow line. What do we have? We have equal high up here. Do we have some areas to fill? We have a lot of areas to fill. It's a lot of drops that wasn't getting filled. So you could have used something like this. Remember, we're still looking at the setup all the way over here. But look how the market came all the way up there. So that yellow line, that's an equal high. If you have that much patience, that's why I said these runners, you have to have patience. Like you have to. Okay. So you getting in down here, you got a 1 to 8 risk reward, like right there on one trade, but it's only going to be possible if you have the patience for it. Okay. Let's just keep going. Let's take this off. Let's take this off. Okay. Okay. Right here, we have a demand entry. Okay. Again, the general area, it don't have to be huge. It don't have to be small. Just make sure you have the main area where the push started from. Okay. The push started from right here. So your zone will have to be right here. As it dips into it, you should be buying when it starts breaking above. Stop loss should be below the zone, or if you want to have a tight one, it's going to be about in there. But just know that if you have a super tight stop loss, you have a high chance of it stopping you out and then going in your favor. Okay, just want to say that right now. So let's have our stop loss safe underneath the zone. Okay, whether you want to have it the safest place is to have it under here, but that's your stop loss way too big in my opinion. So after I mark up my zone, I'm gonna have it a little bit up under it. I'm gonna be honest. But if y'all really feeling like, okay, I want my stop loss to be safe, then you're gonna want to have it underneath the low. But that's, in my opinion, that's just too big, bro. So I'll put it a little bit underneath the zone. Now, a 101, 101 right there. Okay, now what do we have? We have liquidity sitting up here again. So it have to get these traders. Like some traders are literally selling. Like as we are buying, other traders are selling. So we have to wipe them out. You see how fast this yellow candle push up is stopping them out. Now, do we have an opportunity to get an even bigger risk reward than just this? Let's look left. What do we have? We have an equal high right here. I can see it right here. So let's just mark this up. We got an equal high right here. God damn. We got an equal high right here. We have a high right here. That's still liquidity. Just because it's not an equal high don't mean it's not liquidity. That's liquidity. Even up here is liquidity. Okay. So let's go back. Okay. All of them got touched. Now, this one got touched later in the day. And that one, that's too far. Now, it easily touches that liquidity right there. So that's a 1 to 3, and then it literally taps right into that next one. And that's a 1 to 4. Okay, so you gotta have the patience. Okay, can't stress that enough. You have to have the patience to have greater risk rewards. Okay, again, we are looking for supply and demand, support and resistance. We mark up our support and resistance on the wicks and where areas can't close past. Supply and demand have to be a general area because we don't know exactly where the push started from. We have to mark up a zone, so if it come back in that zone, we can get ready. Okay, so I hope this video clears something up for you, and yeah, until next time.